What's going on, traders? Welcome back to day 11 of 25 days of trading. I want to talk about how we could stop blowing so many funded accounts, what approach we should be taking, and how to just make them survive longer. It's one thing not to lose them, but how can we also progress them along closer and closer to payout? If you look at my month so far of December, yes, it's green. Yes, it looks pretty nice. But what do you notice about this week compared to last week? Right off the bat, the number of trades hasn't really changed. If anything, I've traded a little bit more this week, but the numbers are a lot lower. It's FOMC weekend. Today was FOMC. The day prior, very low volume. Even Monday, I didn't find anything that I liked very strongly that I don't need to hammer it every day. Recognizing that I'm not going to make it all in one day, but I could certainly lose all my money in one day. And we're all just one bad trade, one bad habit, whatever, from going down a rabbit hole and acting in our old ways. So we got to come into the game plan of what am I looking to do today? What can I maybe expect? I know it's FOMC, it's low volume. Should I just be expecting the biggest trend I've ever seen? You look at the 15-minute as we set it up pre-market. Since the day prior, which was also slow, we're just stuck in this range, right? So knowing that a lot of people get chopped up on FOMC day regardless, low volume, it's telling me it's not trending. The worst thing to do would just be trading full size, chasing breakouts, right? Your strategy could be working. But if you're taking your setup, your textbook setup, on a day where the conditions are not trending, it's not going to have the same outcome as it would on a day that's trending. So you got to play the range that it is today or just try to get some nice scalps going. But you look at today's price action, it's inside the range. You get a break out here, right back in the middle. The shorts don't run from there. The longs don't run when you get back above New York. There's a little bit of run once sellers get back below there. One more push down, but then buyers step back in. They don't run. They smack yesterday's New York view up, back down to the New York. Yesterday's New York, today's New York. Finally breaks a little new high. Just a whole lot of nothing going on. You can make small scalps within these moves, but when you look at it, is this my best setup? Do I need to try to maximize and make $1,000 on today? Or is this the type of price action where I could easily lose $1,000? Probably the latter, because I know my best setups look like this, trending outside of the opening range. One side clearly in control that I want to be a buyer. I don't want to chase this first break, but I do like the second hold of this New York view up here. Let's go get the next higher high. But if we're not making consistent higher highs like we are on this day, how can I expect this to run when it looks totally different? So if I can get close to view up, this is another one using that 15-minute on the left here. We're above it, broke above overnight view up pre-market. Now looking like we're holding and retesting it. So I am long biased. So I'm not going to chase shorts down here. Buyers defend that overnight. We get back above the blue view up here, which is New York. So if I'm trading mid-range, stop loss at bottom of range, take profit at the top of range, right? I speak about my full strategy on ASFX TV. You can find it down below for free. Get your first month for free if you use code FIRST. That's the way this has to be traded. You look at this one over here. Lower highs and lower lows. It was showing slight signs of it. Potentially here today, right? Lower highs on top and even a lower low. But same thing, the way the candles close, and you know it's FOMC day. You look on the 15-minute, where we were closing, right? That lower low you saw is this pin. So pins, yes, 1 minute. But on the higher time frame, this 15-minute, we're still closing and holding at the bottom of this zone. I don't know if that's the place you want to be chasing shorts, right? Even the shorts don't run there because it's in a range. And that's FOMC. So that obviously negates the range and kills all those range plays. But just really comes down to knowing, when do I perform best? In trending markets with some volatility? Or is it the days when there's news coming up or it's very slow in a range, bouncing between VWAPs? I trade better when it's a clear direction. We're outside of the opening range. I've made videos on all of this, I think, on the VWAPs that I use, what the opening range is, right? This is that first 15 minutes of the day. If we're outside of it later in the morning, that's a great sign that we're trending. Because one side, let's just say sellers, have taken us away from it and we just keep falling away. Today, the opening range, we're inside it the whole time. So the price action that we moved in the first 15 minutes of the day, we're still playing within those prices 5 hours later. That's not a great sign of trend. We should be well away from here if we're trending lower, right? So the fact that we keep on making new low, new low, new low, sellers are getting stronger on top with a lower high, lower low, right? So I think all of us trade better in the trend. If you're trading my strategy, then for sure you would be looking for trending trades. It just comes down to, okay, can I find trending structure? Is the view up in my favor? Why would I not think this can make a new high day? It's not FOMC day. It's not CPI later on this week. Like, it's a normal day. So let's follow the trend until the trend shifts. In this case, it just keeps on following. So you get another thing. Break of open range high, retest to this New York view up and open range high, break of high a day, simply go make a new high. I'd rather be flat on Tuesday, Wednesday this week, right? Let's just make it up. Go to my TradeZella. I've only made $238 today, 52 and 100. So I'm up just about $400 this week. I'd rather this and then come in tomorrow, find this trade, and hit it for $1,000, and then make up $1,400 this week, rather than trying to make $1,000 today or $1,000 yesterday and getting beat up by losing $550 or losing whatever. Because now on Thursday, if tomorrow's clean, I got to try to claw that back. That's not how you get closer to payouts, always digging yourself out of a hole that could have been avoided. So it's just a matter of not needing to make all the money in the world every single day. That's how you can keep your accounts alive, by not pushing them when they don't need to be. Right? You're trying to force trending moves and force a P&L out of this price action that it's just not there, or it's not necessary. You'll feel a lot better off if you walk away up flat or up $200. You come in tomorrow. That's when you maximize gains. When you can find a clear trade that you love, the trend is there, the stop loss makes sense, the volatility is there, great. This is when I'm supposed to maximize, right? Let's just make it up. We have 5 trading days a week. Almost assume that one of them is going to be pretty ugly, right? My day is to trade it as if it's going to be clean, but if it turns out ugly, it turns out ugly. But my job is to walk away with not too much damage, if there is damage at all, right? Because in those other days, the easy ones like this one, when you just press long and it goes higher, that was a nice win. Okay, cool. We all make money on those days. But the ugly days, right? It really comes down to who lost a bunch of money in a bunch of accounts today, who kept theirs alive at break even, and somehow who made some money, right? That's just the 3 categories. If you survive this price action and you still have the account you started at the beginning of the week, all right, great. We're not losing accounts. So now when the trend is actually there, we should be moving the ball forward, right? And I also think it's one of the best times to get funded with all the instant fundeds out there. That the top one was running their Black Friday sale. Now it's the Christmas sale that is 50% off right now. So I had this from an old video, the payouts and all that. We're not going to go into all of this. But just real quick, that right now it's $340 with my code down below. So if you just buy one account, you got to get $3,000 on a 50K. You take out $2,500. Great. But if you can still copy trade up to 5 right now. So with 5, you have the potential of taking out $12,500, right? But to buy 5 accounts, you do have to put in $1,700, right? Because they're $340 a pop. But $1,700 to go get $12,500. Or you buy 3 accounts, $1,000 to go make $7,500. So you're still profiting $6,500, right? Before the split. But regardless, we're saying, well, I just spent $1,000. I just spent $1,700. Everyone's obviously in a different financial situation. But it'd almost be like, let me respect that and not just be trading these as if I bought them for $10, right? You invested money into it, keep them alive. I said it all month long, especially on the Black Friday sale that many of you took advantage of. If you're putting that money forward at the start of the month, you should still have those accounts come Christmas, come New Year's, right? And if you failed them, you failed them. But you shouldn't need more accounts between December 1st and January 1st, right? You're either still chugging along on the ones you started, or you're almost at payout, or you're at payout. Obviously, everyone's a little bit different, but you know the difference between struggling trading and doing good, blowing it all away, buy some more. Doing good, blow it all away, buy some more. 2 different categories. I'm really speaking to the ones that just torch them all in one day, right? It's not a bad stretch of trading with just one day. So put in a max loss, wait for the trend, hit the size when it's calling for it, right? There's all these beautiful setups that I want to trade less. I want to trade when it's looking the best, right? I'd rather than scalp this for 200, 200, 200, just give me one. Just give me one shot at this. Let me try to make $600, right? Just wait there. Less is more, less trades, less indicators, less everything. So if you think you need to trade every single day or all of every move, I would also even preach throw the FOMC out, right? We're not talking about that anymore. Just regular trades. One trade, you're done. One trade, you're done. One trade, you're done. That's how you don't lose accounts, especially if they're green, obviously. But if you make money, you should be probably done for the day. If you're trying to go for your first payout, second payout, whatever, rather than going green, wanted to keep on trading because you need it all today, you give it back. Well, now we're at break even. What do we do here? Do we want to go back to green, try to get back to green? So you're going to probably take a third trade. If that one goes red, you probably know what happens next. That account's gone. because then a red one followed and a red and a red, and it's over, right? So it's safe to say I made some money, I'm going to leave. I showed up again the next day. Is there a trend? Yes, there is. Let me maximize on it and get out of here. And then I'll come back again and do it tomorrow. If you just stack together good weeks, everyone's so focused on buying the account today on Monday, the 1st, I'm going to take a payout on Friday or by next Wednesday. It's like if you spent $1,700 on this first day to go get those 5 accounts and you have to wait till the 18th to take the payout, is that not okay, right? We have to wait really 13 days of trading. Like that's pretty reasonable, pretty quick, rather than trading well. I blew it all. I was impatient. Now I got to go buy another $1,700 worth of accounts, spend another 10 days, and then maybe take the payout over there. It's like, well, it actually took longer. You were in line to take the payout there, but you rushed it, and now you're actually taking it later. So by going quicker, you're actually going slower. Figure that one out. But I appreciate you guys tuning in. We're all going to blow accounts. Definitely don't run from it. Don't shy away from it of what did I do wrong, right? It's valuable to know, like, yeah, I'm a really, really good trend trader, but this is what keeps chopping me up, right? You need to be self-aware of what's the type of trades that's throwing you off tilt, that's taking most of your money, where are your stops going on these days when you're losing most of your money, so you can learn from it. And then the next time you try the account, you hopefully don't lose it because you have a little bit better of a game plan on what to do and what not to do. And even one last thing to speak on the FOMC part, even though it's over. If you go to Edgefield, they even have an FOMC performance report. And you can see here the volume of the 3 days following FOMC, FOMC itself, and post-FOMC. The performance is very, very low. Not a whole lot going on. So you're forcing moves out of something that's not really moving as much as it should the days following FOMC. So if you could just survive, look for small little scalps, not expect these giant runs that historically don't happen, then stay away and come back on the days after FOMC, and we should find some good movement, or at least better movement, right? So I appreciate you guys tuning in. Make sure you check back in tomorrow for the next day, all the way through Christmas morning. Drop a like, leave a comment. Always check out the top one sale, ASFX TV. All that good stuff is always down below. So I'll see you guys on stream tomorrow morning.